Asian markets rise as investors shake off trade warfares. Turkey marks 2 years since the disaster of the century, and we look at Nigeria's food crisis as economic hardship pushes millions to the brink. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Asian markets rose on Thursday, tracking gains on Wall Street following the US Postal Service's U-turn on a ban on parcels from China and Hong Kong. All major indices in the region were up as investors shrug off a week of trade turmoil. Overnight in the US, the three major indices posted gains for the second day in a row, even as notable tech stocks Alphabet and AMD posted steep losses following earnings. Global equities and currencies have been hit by volatility this week after US President Donald Trump announced hefty tariffs on China, Canada and Mexico, sparking tit-for-tat responses. Let's get more on this now with Tim Waterer, who's Chief Market Analyst at KCM Trade. Now, Tim, investors seem to have shrugged off a week of trade tensions, but is that really the case?
Good to be with you. Well, that's right. Sentiment looking a little bit healthier now versus at the start of the week when those 25% tariffs were due to be implemented on Canada and Mexico. Of course, we did see some relief on that with a pause, and that's helped, I guess, markets regain their traction in the past few days. And also on the US-China trade relations front now, we did see a counter response from China, 10 to 15% tariffs on the US. I think the market's sort of looking at that and saying, well, it could have been worse. And things could still well escalate between the US and China. But I think all told, I think markets are saying I probably won't get 25% tariffs on the US neighbours. Now they're coming to the negotiating table on the border issue. But I'm not sure we're out of the woods yet with the trade dramas. I mean, I think investors are now thinking who will be next on the list. EU is looking like a potential option there. Trump not too happy with the trade surpluses the EU has been running with the US, and Japan could be another one too. So markets definitely looking more settled now, but could still be some dramas to come, I think.
Right, and Trump's tariffs are causing some panic for Chinese e-commerce giants like Temu and Shein. How can they work to minimize the level of disruption to their services?
That's right. The removal of the tax exemption for the packages under $800, that is really going to basically create higher prices for those imports of goods from Chinese warehouses for the US consumer. That and the additional 10% tariff. So the upshot of that being that, Chinese goods in the US will be more expensive, which in theory will reduce demand. So I think for the likes of Temu and Shein, as you say, they're going to have to look at some other options that could be on the table. I mean, one of them would be to, I guess, create warehouses in the US for other nations. Now, that's doable, but I mean, it's a costly infrastructure program there, and it will take a little bit of time. So that's one option on the table. And I guess the other thing they could look at is, I guess, looking at increasing demand from other regions. If there is some more turmoil from global tariff wars, maybe there are some other opportunities. But yes, definitely it's shaking things up for the business models of those two companies who have been benefiting from that tax exemption that's been in place for some time now in the US.
All right, we will have to leave it there. Tim Waterer, Chief Market Analyst at KCM Trade. Thank you very much for being with us.
Thank you.
Now, 2 years after two earthquakes left parts of southern Turkey in ruin, business owners are opening their doors for what they hope will be a new era of prosperity. 80% of buildings were damaged in Antakya, the main city in southern Hatay province. And while construction there is still ongoing, the area's cultural and culinary legacy is slowly being revived. Randolph Nogel reports.
Salah Usta is preparing the kitchen for the evening rush. The restaurant he and his wife have built is an institution in southern Turkey's Hatay province.
I chose the same profession as my father. I have been doing it for 50 years.
The twin earthquakes 2 years ago left their restaurant in ruins, which is why he and his wife are operating out of these container units to keep their business afloat.
We lost our business after the earthquake. Philanthropists built this new workplace. The secret is to love your job. My wife helps me. She is my biggest supporter.
Biz aile gibiydik.
We used to be like a family with our old customers. They would call me mom and I would call them my children. We lost most of them in the earthquake. We still are very sad. Sometimes I say to Salah Usta, thank God we're alive with our 3 children. We have to move on.
The old city of Antakya in Hatay, where Salah Usta and Hanife's restaurant was located, is slowly being rebuilt. A new restaurant is under construction for Salah Usta and Hanife.
Rich in culture, including its cuisine, Antakya was one of the most visited cities in all of Turkey before the earthquake struck, drawing more than 500,000 visitors every single year. You can see what the city used to look like on these placards, but with many areas still under construction, a long road lies ahead for tourism to recover.
This is the Old Bazaar. It is one of the most symbolic and historical places in Hatay. It was destroyed because of the great disaster, but we have to stand up. I hope tourists will return.
We are very hopeful. Our old customers have never left us. Our business is good for now. I hope it will be even better.
Until then, they'll continue to bring the best of Hatay's cuisine to the table. Randolph Nogel, TRT World, Antakya.
And for more on this, we're joined by Filiz Katman, President of the Energy, Politics and Markets Research Centre at Istanbul Aydın University. Now, it's been 2 years since the disaster of the century. How are recovery efforts in the region coming along?
Yes, it is the commemoration of the devastating earthquake, and since then there has been quite very structural efforts in order to reconstruct the cities. And these efforts, as you have seen on the video, has achieved a certain amount of accomplishment, but we should also consider that it has been involving 11 cities, which is a very big area. If we consider the towns, the villages, it's a very vast region, and it takes some time, but considering the conditions which happened after COVID-19, the economic conditions, I think it's a quite achievement with regard to the current condition of the cities, where most of the people living in this territory in 11 cities have located to their new buildings, but still there should be some more efforts to be held in the region, but it's a coordinated effort. We should keep it in consideration. It's a public, civil society and philanthropists and business people. It's a kind of triangle that try to accomplish the goals which were set right after the earthquake in the region.
And as we heard in our report, many businesses were destroyed in the twin earthquakes. How has the government supported local business owners?
Yeah, there are lots of initiatives taken by the state with regard to respective ministries in order to support the affected businesses, like credit loans with long-term repayment processes or some kind of subsidies provided to the region, tax exempt. But we should also consider the councils in the respective sectors. We have economic initiatives which were taken by the respective sector groups, organizations, in order to support their fellow business people. And also we have the investment opportunities provided specifically to the region for the foreign investors with regard to tax exempt, with regard to giving certain subsidies to the investors. These are the initiatives in order to support both the local business people and in order to attract foreign business people in the region with regard to the certain incentives provided for their investment in the region.
Okay, we will have to leave it there. Filiz Katman, President of the Energy, Politics and Markets Research Centre at Istanbul Aydın University. Thank you very much for being with us. Now a quick look at some of the other top business stories from around the world. The Panama Canal Authority has confirmed that it will not be allowing US vessels to pass through without charge. This contradicts an earlier statement by the US State Department, which claims the deal would save millions for the US government. The authorities' denial is likely to escalate tensions following President Trump's threat to reclaim control of the crucial waterway. Canada has posted its first trade surplus in 10 months for December, with a surplus of $496 million as exports exceeded imports. The increase was driven by a weaker Canadian dollar and efforts by US businesses to stockpile Canadian goods ahead of possible tariffs. A significant increase in energy exports and higher crude oil prices contributed to the widening trade surplus with the US. Ford has reported a $1.8 billion profit for the fourth quarter, with revenue up 5% to $48.2 billion, driven by strong US vehicle sales. But the carmaker forecasts a tougher year ahead, expecting profits to drop to between $7 to $8.5 billion. The US auto giant says prices are under pressure and warns of too many electric vehicles in the US market. And Qualcomm reported better than expected sales of $11.67 billion and profits of $3.4 per share for its fiscal first quarter. The company beat analyst estimates due to strong demand for AI-enabled smartphones. It forecasts sales of $10.75 billion and profits of $2.8 per share, both above analysts' estimates. Nigeria stands at a critical crossroads where economic instability, food insecurity and violent conflicts threaten the livelihood of millions. Inflation rates have skyrocketed, agricultural production is struggling and poverty levels remain among the highest in the world. As families struggle to put food on the table, the nation's policies and economic strategies face serious scrutiny. The question remains, can reforms, investments and policy shifts create a sustainable future for Nigeria's most vulnerable people? Nigeria's inflation rate reached 34% in 2024, the highest in 28 years, with food inflation accelerating to over 40%. More than 2.2 million people have been forcibly displaced due to violence. Many are living in refugee camps without adequate food supply. 32% of children under 5 suffer from impaired growth due to malnutrition, and at least 2,400 children die daily from not having a healthy diet. That's despite agriculture contributing 24% of GDP and employing 30% of the workforce. Inflation disproportionately affects low-income households, with 40% of consumer spending in sub-Saharan Africa going on food. The Naira has lost 70% of its value since June 2023, pushing more Nigerians below the poverty line. Nigeria has the largest population of people living in poverty after India, with food imports becoming more expensive due to currency devaluation. In 2020, the Nigerian government launched the National Multi-Sectoral Action Plan for Food and Nutrition to combat food insecurity. However, insufficient funding has hindered progress, with agricultural investment failing to meet its targets. And as if that is not enough, armed groups continue to force farmers off their land, close markets and extort communities, making food production unsustainable. For more, we're joined by Mukhtar Mohammed, international finance and economic analyst. Now, Mukhtar, how has Nigeria's high inflation rate impacted the average household's ability to afford basic necessities?
Thank you. It has really affected the household, especially when earnings is not commensurate with inflation. Even if you look at the minimum wage, it was hiked by almost 100% by the government. But when you look at the price of goods and services, I mean, they're above that. In terms of the goods and services also are not keeping pace with inflation of 34%. If the goods and services were at an inflation all at 34%, then you have the minimum wage, then you'll be able to see that household will still be able to meet their basic need. But what we have is some household items, especially food items, soaring to over 45% or even sometimes more than that, depending on which type of household item you are purchasing. If those household items are local household items, you see the price soar about almost 30% because of cost of production and then high energy costs. And then if it's foreign, some of these go as high as 80% because of the exchange rate volatility and the custom duties that were supposed to be paid when these goods are coming into the country.
And what specific policies are needed to help stabilize food prices and improve agricultural productivity?
Well, for the food prices, I think the president came up with a very good strategy, which was to remove tariff on all household items, especially agricultural food items. But unfortunately, that policy did not see the light of the day. It was supposed to run for 6 months. It got into a bottleneck between the customs and the Federal Ministry of Finance, and the president have to take it back into the tax reform bill. So that has not seen the light of day. So, and that's why you continue to see those hiking prices, especially when these prices are imported. And then the other, in terms of the agricultural outbreak, I think the government have tried, especially the CB and the Monetary Policy Committee, trying to intervene directly into agriculture. But again, you have those challenges that have to deal with high energy costs and have to do with high cost of transportation and high levies when some of these goods are moving from one state to another. So for government to deal with that, they have to address that. And also, like you pointed out in your report, insecurity also is causing a lot of distortion to food prices and agricultural households, especially in the northeast, north central, which happen to be the hub of agricultural activities for Nigeria. In Nigeria, most of these farmers are not able to go to farm because of insecurity, and so government is planning to provide security for them. But that is an ongoing process.
And with the Naira's drastic devaluation, how can Nigeria attract investment without worsening economic hardship?
Well, the Naira devaluation has been a blessing to Nigeria. If you look at, especially their foreign investors, you say, no, I've done a Eurobond was highly oversubscribed because of the kind of returns that we are giving to investors. Again, but by that affecting helping smaller businesses in Nigeria has been a big challenge because the Nigerian economy is largely driven by SME, smaller businesses. So what we've seen is that portfolio investors really are taking advantage of the exchange rate volatility of the Naira. But again, in-house, we've seen a hike in interest rate, and this is making a smaller business suffer. But what the government is trying to do is attract inflow, especially in the area of portfolio investment, and so that you can have a lot of liquidity and stabilize the exchange rate. And once the exchange rate is stable, it's more like a twin weapon because that will also stabilize inflation. Like I said, inflation is largely driven by exchange rate volatility. And also that will also begin to help smaller business when this rate will now come down. But as it stands now, is a big challenge. But again, it's an advantage because foreign, like I said, Eurobond, because of a high yield, we are giving investors, a lot of investors are taking advantage of it.
And what can Nigeria learn from other nations that have successfully navigated similar crises?
I think we have to learn, we have to also look at the short-term and the long-term solution to our problem. The short-term solution is to see how you can drive down tariff on imported food and agricultural equipment, either in terms of food. And that happened in Kenya. Kenya did it, and that drive down inflation. We must have to learn from that. We also have to see in the long term, begin to look at how we can be able to maximize production in our agriculture, especially what the average Nigerian normally eats. And we're talking about rice, because again, we've seen that over the time, government have tried to make rice, especially a household item that virtually every home in Nigeria consumes, to be low. But unfortunately, that has not seen the light of day because of cost of production and also high transportation costs, and added to it is energy costs, and also importation of these machineries that are used to make them into finished products. That has been the major challenge. But I think the government is working on that. Hopefully, they will be able to find a solution to that. But again, the main solution will come if we remove tariff on that. Then you look at the long-term productivity of the Nigeria, especially in terms of table food, and also improve security in the Northeast. That is key because they are the key supplier of agricultural products to every part of Nigeria. And so once the farmers cannot go to farm, that means demand is high, and demand is high and supply is low. So that will continue to drive up cost of household items.
Okay, Mukhtar Mohammed there in Lagos. Thank you very much for your analysis.
Thank you for having me.
Now, the annual Investing in African Mining Conference underway in Cape Town brings together over 15,000 government, mining and business executives from across the globe. While Africa remains the destination of choice for mining, it's an industry that continues to face significant challenges. Crystal Alderson reports.
Review and adapt. That's the message from mining leaders here in Cape Town, future-proofing Africa's mining and ensuring sustainability for the sector is a key issue at the annual mining conference. Mining leaders here say Africa remains a key player in the mining sector. The continent produces more than 60 metal and mineral products and has about 30% of the world's total mineral reserves, including gold, diamonds and critical minerals like cobalt. However, the mining industry is undergoing unprecedented changes, including high commodity price volatility, rising exploration costs, and ensuring that mining communities benefit from their resources. These issues affect countries such as Botswana, South Africa and Ghana. Ghana is Africa's largest gold producer, and the sector is a key driver for Ghana's economy, contributing 17% to the country's GDP. However, the country's mining commission says it has to ensure that local communities benefit from the resources. With more than 3 million people working in small-scale mining alone, Ghana has now enacted legislation to ensure this happens.
The Mineral Development Fund actually get a share of appropriation from mineral royalties, and they will be directly introducing interventions in host mining communities with the intention of ameliorating and mitigating the impact of mining operations on the lives, the welfare, and well-being of host mining communities.
According to mining experts, the issue of beneficiation has been on the agenda for more than 20 years, and countries have not been able to implement the strategy thus far.
I think we have to look at why that might be. In South Africa's case, I'd say we've gone backwards because by losing energy, by having a worse power supply, we're in effect de-beneficiating, because what we used to add was power.
Analysts say it's about getting the basics right. However, mining technology firms are bullish about Africa. From Morocco to Ghana to South Africa, new mining tech is coming to market and, if possible, will enhance the safety of mines.
We are committed to making sure that mining is sustainable and safe and efficient for our customers. And this not only has an impact on our customers, but of course on the communities that they are situated in.
While Africa remains an attractive hub for mining activities, despite its inherent challenges, sustainable mining will ultimately define the sector's legacy for all stakeholders involved. Crystal Alderson, TRT World, Cape Town.
And following a difficult year for the car industry, Toyota has preserved its title as the world's largest automaker by sales in 2024. And it's mostly thanks to its record high hybrid sales. Punani Shasta has the details.
The Japanese car maker Toyota took the crown as the world's best-selling auto company. With over 10 million hybrid vehicles sold in 2024, it's their 5th straight year at the top of the table.
We are very pleased with our 2024 sales performance, which reflects customer support for our multi-path approach to electrified vehicles. Our growth is a result of offering customers the choice of technologies, combined with strong brand, product power, and excellent support from our retail partners.
Toyota Europe sold over 1,100,000 vehicles this year, an increase of 3% year-on-year, marking the 4th consecutive year that Toyota brand occupied the 2nd best-selling passenger car brand in Europe. In North America, it reported an increase of 3.7% on a volume basis in the US, with sales of over 2.3 million vehicles. But looking forward, it's unclear how far the company will be affected by the return of President Trump, his attitude to tariffs, and electric vehicles.
And I will end the electric vehicle mandate on day one. Thereby saving the U.S. auto industry from complete obliteration, which is happening right now, and saving U.S. customers thousands and thousands of dollars per car.
Some American drivers like Jennifer List don't agree with Trump's policies on this.
I would just love if they would all take climate change take the politics out of it, and let's just figure out how to all thrive in what's clearly a warming world and take the time to really understand what's happening to our climate and Earth systems.
This was exactly what Toyota officials aimed at with their multi-pathway approach to electric car production. They say they strive to design low and zero-emission mobility solutions to meet regional needs and products that satisfy demand. Toyota Motors North America announced earlier that it has invested nearly $21 billion into its U.S. manufacturing operations to support electrification since 2020. And it's now gearing up for another busy year ahead. Pinar Nishasta, TRT World.
Well, that's all your business news for now. Thanks for watching.